Right, good afternoon, everyone, and welcome to our session on the European Payments Initiative. This afternoon, we're going to be talking about European payment schemes, and the most notable thing about European payment schemes at the moment is that there isn't one, but there is an initiative in place in order to restore the balance of payments across the world, and that's what we're going to be talking about this afternoon with a very distinguished panel. So that's the plan for today. And we shall see where the discussion actually goes. So our panel today, as we can see here, I say distinguished doesn't really cover it, but let's just ask each of the individuals to introduce themselves. So Heath, would you like to start with yourself?
Yes, thank you. I'm glad to be here. My name is Gijs Boudewijn. My daytime job is Deputy General Manager at the Dutch Payments Association. But I'm probably more here because I chair the Payment Systems Committee of the European Banking Federation and sit on the board of the European Payments Council, which is a European scheme, by the way. So we do have one, or several, to be honest.
Yes, we do. Okay, that's great. And then Eric Tack. Hi, Eric.
Hi, Tim. Glad to be here. Erik Tak, indeed, head of the ING Payment Center, and as such involved also in the steering committee for the European Payments Initiative, so being able to contribute from that perspective.
So ING are one of the founding bank members, aren't they?
Indeed.
Yeah, that's great. And then Mark Massar, how are you doing?
Hey there, Tim. This is Mark Masser. Currently, I'm the Chief Product Officer at Nets. Responsible for the merchant business, and I've been in payments quite some time, both in the UK and Europe, but also globally, working with all the other big giant acquirers. But been in payments a long time.
I think we probably all have, to be honest. I wouldn't like to count up the years on this panel. And last but not least, Dave Birch.
Hi, I'm Dave Birch. I'm Global Ambassador for Consult Hyperion, and I write, and I've written some books and things about payments and stuff. I'm here just really for diversity purposes because nobody else on the panel has a beard, and so we need to,
Okay, it's balance, is it? Okay, yeah.
It's balance,
yeah. The most notable thing Dave ever did was hire me 30 years ago. Really, it's the most important thing of all. So anyway.
Sole claim to fame.
Claim to fame. Anyway, 30 years, it's quite scary. Right, okay, so the reason for this particular panel, the thing that's triggered it, is that out of the blue, sort of, but not really, a couple of years ago, a thing appeared called PEPSI, which was the Pan-European Payment System Initiative, which eventually got renamed for reasons I can't really imagine into the EPI, which is the European Payments Initiative. And the European Payments Initiative is essentially a payment scheme for Europe. And there have been several attempts in the past to have payment schemes for Europe, which have, for various reasons, not succeeded. And we'll possibly touch on why that is later on and why this may or may not be different. So essentially, the history here is Europe wants one, but it's never quite been able to get one. But now there's a scheme in place to try to get us to that point. So let's start off by just briefly talking about what the EPI is. So Eric, you kindly volunteered to take us through this. So if we could just talk about what it is, as opposed to why it is, because we're going to come on to that in a moment. So what is the EPI? What's it doing? What's the aim of it?
Yes, so thank you. So yes, let me give a brief introduction on that. Coming back to your earlier point, just before Christmas last year, we got some very nasty letters from the General Counsel of PepsiCo regarding the use of the Pepsi name for a project. I actually assumed that being a runner-up brand, you'd be happy with any publicity you can get, but apparently that was not their view. And not quite in the Christmas spirit, they were quite pushy to ask us to change the name, which then ended up with the less memorable EPI name. The EPI name, however, is just a project name. It won't be launched commercially under that name, I would imagine. So what is it? It is initially a response to a request from both ECB and EC to regain what they say is the sovereignty of payments in Europe in the light of increased geopolitical tension. But of course, that doesn't necessarily mean a business case or an incentive for banks to collectively do something about this. So what's in it for banks? I would say we have a situation, as you mentioned, with mostly domestic schemes, particularly for retail payments. Some more successful than others, but typically they can only be used in one country. As a result, the volumes in there are limited, and therefore the volume is also lacking to keep investing to be sufficiently relevant going forward. So we see that many of these domestic brands are under pressure for that reason. And the idea was taken up to see if we could, on the one hand, leverage the investments we're already doing in instant payments, and on the other hand, create sufficient scale to keep up the investments with all the other solutions out there. And the way that we foresee doing this is in two ways. First of all, we already said leveraging instant payments, launching a digital solution which would ride on the rails of instant payments. So that's one, enabling all use cases, B2C payments in shops, physical shops, e-commerce, m-commerce, peer-to-peer payments. But as many or most, I would say, of the domestic schemes currently are card schemes, and none of the participating banks or communities are very keen to lose any customers or transactions in the process. Initially, we will also migrate towards a shared European card scheme first, which will then coexist with the digital SCT INS-based solution. And over time, we expect volumes to migrate from the card rails towards the SCT INS rails, starting with E&M commerce, and maybe a bit later because there are some more technical issues to be overcome on the physical point of sale.
Right. Okay. So
that's it.
That's it. That's all. So just to be clear, at the end of this, what we have is something that's card, but it's also digital wallet, and it could be tokenized card and digital wallet, or it could be direct account payment. It's covering face-to-face, e-commerce, cash withdrawal. In fact, it's covering all of the use cases, but it's riding on the SCT INS rails in the end. So basically, the clearing and settlement is being done through the existing infrastructure. Is that correct? The idea?
Yes.
Okay. So it's quite ambitious, shall we say? It's actually covering a lot of the basics. I guess, the question is, and you kind of touched on that, but I'll go around the panel and talk a little bit about this, is that if we look across Europe today, we're not short of mechanisms for paying. All right? I mean, we've got domestic card schemes, we've got mobile digital wallets coming out of our ears. We obviously have Visa, we have MasterCard, we have the big Chinese digital players as well. I don't lack the means of paying for things. So I guess, really the underlying question, and you did touch on some of that, but the underlying question here is why? Okay, why is there a driver for this, and why is there a driver for that now? So maybe just go around the panel and get people's opinions. So maybe Hiss, would you like to start with that? What's the driver as far as you're concerned?
Yeah, thank you. Yeah, it sounds a bit like I work for the European Commission or something, but we have to realize this is all about Europe. This is about the internal market. Underlying and behind all this is, of course, the political goal to create an internal market for financial services, including payments. Why do we want that? Well, we want to create a competitive, homogeneous internal market like the US has. So the ultimate goal is to create an internal market for payments that is more competitive at a global scale, with 450 million customers, plus or minus a few if we have Brexit. So the whole struggle has been for decades to bring down the barriers of cross-border payments. We do not have domestic markets anymore. We have one single European market for payments. Where we have been successful is with the SEPA products, the European Payment Council's schemes, the SEPA credit transfer and the SEPA direct debit. And so far we did not succeed. This was a dream that was killed some years ago. We did not succeed in creating a SEPA card scheme, and we did not succeed in creating a European e-payment scheme. For various reasons, those failed. that left the question, as rightly Eric said, of the politicians, the ECB and the Commission, in the current geopolitical context, that we've become too dependent on non-European solutions. Then it becomes more political pressure on the market players to come up with a European solution, but now also and really that's the word used, sovereignty of Europe, because that is what is at stake in the current geopolitical context. And that is why these 16 banks from 5 countries have picked up the challenge. Well, Eric explained what that challenge is. It's a huge challenge.
Okay. Okay. So, I mean, Mark, in your view, what's the drivers behind this?
Yeah, I guess the why is an interesting question, and I'm no expert on European politics or sovereignty of financial systems, I guess, but it seems to me that this is quite reactionary, because you see, let's say, consolidation and fragmentation at the same time, simultaneous fragmentation and consolidation in payments in just the normal everyday consumer sorts of avenues. Card acquirers, huge sort of consolidation, especially driven by the US players, fragmentation, domestic schemes, domestic wallets, Asian wallets, mobile payments, all sorts of different things. And I think that there's a bit of fear of missing out here, fear of losing out. And it just strikes me as a bit odd, to be honest, that, the very first things, Eric said, for example, decided by the ECB and, the EC, but, does the European Central Bank or the European Commission, are they the ones that actually every day pull out a card and tap or swipe or dip? And the answer is no. Payment schemes have to start with the users of those schemes. They have to start with, what does a consumer want? What does a merchant want? And it seems that, to be honest, yes, sovereignty of a payment system, that's an enviable goal, but I'm not sure that it really takes into consideration the wants and needs of the people who would actually use the payment system in the first place. And I think that's maybe in the past why there's been challenges with other systems. So coming back to the why question, the why question's a bit muddy, to be honest, because the motivations of the larger players are clear, but those don't align with the wants, needs, and desires. So you have sort of mismatch of product. You don't have product fit for this particular initiative.
Yeah, I mean, it's an interesting point. We'll actually come back to some of that in terms of the incentives for various players to participate in this. Dave, I mean, as the only non-European, actually that's not true, Mark is a non-European as well. But anyway, as a non-European, standing on the outside of this, what's your view? I mean, why is this happening?
Well, the original driver for it was, and I'm not making this up, I think this is a true story. The original driver for it was that a Finnish MEP about 20 years ago went into a Greek taverna. I mean, I've been told this story by several people. A Finnish MEP went into a Greek taverna and discovered he couldn't use his Avant card in Greece. And this was the origins of the drive for what then became the more politicized rise up against what they used to call proprietary. They mean American schemes. So it actually goes back an awfully long way. Roundabout, and I don't want to sort of like be grey-haired old, granddad telling these stories, but it's useful to understand the trajectory, because in about 2007. There was a thing called the EAPS, the Euro Alliance of Payment Schemes, I think, which was like, why don't we connect together all the ATM networks and use that to create a pan-European debit network? And then we had things like Monet and Payfair, and they didn't really go anywhere. And then in 2011, Gertrude Trumpel-Guggerel, remember her? Actually, I was on a webinar with her yesterday. How bizarre is that? What an odd coincidence. Said that 2012 should be the deadline for pan-European SEPA credit transfer, SEPA direct debits. That didn't really happen. The merchants didn't like, actually the merchants back then wanted a pan-European credit transfer infrastructure. And there was a thing called the e-payments merchant initiative. That was like 2011, 2012, which was kind of like a proto MCX that wanted a standard credit push. They didn't want any debit solutions at all because, as everybody understands, if you have a credit only system, it's much cheaper to own and to operate. And then, and actually, I don't know if Heist would remember this, but Norbert Bielefeld, I remember reading a thing by him, which must have been around about that time. And he wrote a very good paper for the European, it was the Savings Bank Group, wasn't it? ESBG or something, the Banking Savings Group. And he wrote a paper, which I can't remember the detail, but he said, he's very, very, very wise guy, Norbert. I mean, I pay a lot of attention to what he says. And he said, look, the regulators have got to stop trying to steer a solution. This is what's going wrong. What they need to do is create the conditions for a new solution to come along and focus on, competition and not trying to invent this third scheme in their heads. And he was right. And it's taken years of PSD2 and open banking and so on to get to the point where something, as Eric was discussing, was described. I mean, my general point about it is that, I know we call it the third scheme but the point is, it's in everybody's interest to have interoperable credit transfer solutions. And now, because we have open banking and because we have PSD2 and because we have 222 to carry the extra data that we need to make this good for consumers, and because in the UK, at least, we now have the request to pay standard in place, you can begin to see the emergence of what should be the next generation, past cards and things like that. What I imagine, I don't know if Mark and Eric want to comment on what's coming next, but I imagine most people would think an RTP system with strong authentication based on biometrics and, credit transfer only payments actually is pretty optimal, so I think it's taken us 20 years, but we are finally, the end, there are some real possibilities in sight now. Am I being too optimistic, Heis?
No, you're not. But you're stepping to the next question. What should it look like? It's a why question, right? But
we'll talk to that. We'll talk to that in a moment. Can I just ask a question about? Just in this area, we'll probably all remember a few years ago that all of a sudden one day Visa stopped working. Is there an issue here about payment system resilience? Because the people I talk to, both amongst regulators and governments, at that point suddenly woke up to the fact that actually there was a problem in payment systems in terms of resilience. And as we move to a cashless society, it becomes critical. Is that part of this story? Or is that just simple coincidence in terms of, the third scheme coming along? Eric, what do you think?
Yeah, I think, to be honest, I think that this is kind of what's the opposite of collateral damage, collateral benefits, that you might actually de-risk some of that. We're experimenting in the Netherlands domestically with our peer-to-peer solutions that the banks have, which run on the SET range. Well, which is supported by Ideal again, but it's a payment request functionality on top of Ideal that all of the banks have. To have this as a backup facility in case the card authorization systems are down, unavailable, or anything. And so you can use this as a backup, but I don't think there's a business case for just as an insurance premium develop something like EPI just as a fallback. That would be way too expensive. I think I'm more on the train of thought of David, where he sees this going. I think that is where we probably want to end up. The difficulty is how to get there. So we have a number of things. We currently have people who have and trust and use cards, a bit different country by country, but the French believe that cards is kind of the go-to method to paying online, whereas in the Netherlands we have Ideal and the expectation is completely different. We have merchants that say they would love to have solutions based on credit transfers. However, when the money comes in, even when it comes in instantaneously in their back office, in their finance department, they don't have a way yet to actually tell this to the cashier in location X and cashier Y, who knows that she can actually release the goods and they're being paid. So there's quite a bit of infrastructural work needed to make it fit for purpose. In the same way that we've seen cards that were developed for point of sale, and they were kind of shoehorned and reused and badly used for e-commerce and created all kinds of problems. SCT Inst is not immediately usable easily for large retailers. And in fact, they tell us that if it's instant payments, they would like not to receive all of those payments individually and reconcile them individually. They want us to bulk them up and send them at the end of the day. So that begs the question, so do we need a separate authorization message layer on top of this, as we do in Ideal, or can actually the payment be the message? And those kind of things require a lot of work. So that's why that end vision that Dave, very true and well observed, is not going to happen this year or next.
Yeah, I mean, what this is coming across as is that maybe by design or maybe by accident, the infrastructure, the underlying capability for the EPI has been laid in place. What you now have to put on top of it is a layer of management and, well, we haven't talked about it, but also a layer of governance. I mean, that's part of the role of the EPI as well, isn't it? I mean, they're setting up a governance company, I think.
Well, even more than that. So in the Netherlands, we're used to something which is still serving us well, where there's basically nothing like a chargeback or something like that in Ideal. It's a goods funds model. There's a high element of trust. The e-commerce retailers union helps police the bad guys and certifies the good web shops. And we know that 80% of the traffic is with around 10 blue chip companies that everybody trusts. But getting citizens of countries like France who've been used to trust websites and e-commerce because they have this chargeback right. And does that mean that we want to superimpose that on top of a credit transfer, which will inevitably also compromise the efficiency and the low-cost nature of such a scheme? Those are questions still to be answered.
Yeah, okay, there's work to be done. Okay, I want to kind of jump to basically another question here. So if we think about all of the players that exist today in the payment network that we know, so, you know, we have issuers, we have acquirers, there's PSPs and whatever. What's in it for them? Why would they want to participate in this? So, Mark, would you like to, you know, from a Nets point of view, from an acquirer point of view, or from a merchant acquirer, from a merchant point of view, what would induce you to want to play in this market?
Yeah, that's a great question. The first, I don't speak for Nets as a whole, right? But coming back to the sort of the reasons why you would want to deploy or use something like this, there has to be a couple of things, right? Interoperability, ubiquity, demand, volume. All of these things, high degree of trust, better than what we have today, lots of things. And, just spending some time with the EPI folks, all the Wyman team and the consultants and that, there's a high degree of, let's say, resistance against, reuse of any kind of infrastructure or mechanisms that exist today in just sort of common everyday payments. You can't use the same standards around chips. You can't use the same, networks. And hopefully they've come off of some of that, to be honest. But that right there is a resistance factor, because you're starting to talk about a complete replacement of the payments infrastructure across Europe, and that's not a small thing, right? So why would acquirers, participate? Why would merchants want to participate if you're going to impose or regulate the existence, to sort of will something into existence that doesn't have a huge consumer base and doesn't have a huge acceptance base, and doesn't have ubiquity, it doesn't have interoperability? I think there's a bit of chicken and egg, sorts of things. Those are all sort of, why wouldn't you? But the whys on why would you want to do this, I think, acquirers exist for two reasons. They exist to facilitate exchange of value between two disparate parties and to underwrite the risk associated with that. And both the transactional risk and the risk on the business for the merchant. and that merchant risk is going to still exist. What happens, you put this big, payment scheme in place, that's great. But let's say all of the airlines, and we've all seen, what's happened with airlines, if we don't have an entity that underwrites and takes the risk on those businesses, then, essentially the consumers are left holding the bag, and the banks associated with that. And I think that's sort of in the opposite direction of what people are going to want or even tolerate. And so there has to be sort of a benefit for players in that space. I think there's a lot of good things that could be there, helping merchants solve problems that they have today around cross-border, increased fines or fees that they have, in sort of card payments and card payment schemes and things like that. The ability to reach consumers a lot easier, from a common euro perspective, let's say, without paying cross-border and FX and and sort of different rates and fees and things like that. So I think there's a lot of benefit, especially in the online community, for merchants and for the people that facilitate the exchange for those merchants. I think there's a lot of good things there.
Yeah, I mean, you touched on the agency problem. I mean, merchants don't want to accept it if you don't have consumers, and consumers don't want to use it unless you have merchants. I think that's probably not something we're going to have a lot of time to talk about. Eric, I mean, if we look at this from the bank point of view, right, the issuer point of view, what's in it for issuers? Why do the banks want to participate? What's driving them to be members and do all this work?
Well, I think that there's a number of incentives here. So maybe reacting a bit on Mark saying, well, you have to start from scratch. People may not like it. What's in it? I think the starting position, although merging that is quite a challenge, starting position is there's already billions of transactions on domestic schemes today. So apparently they have some relevance. They have acceptance, mostly domestic. I think that what we get back from our customers who love Ideal, in the Netherlands, for instance, they want to use it abroad as well. They don't want to use something else that they're less familiar with, that they're less comfortable with whenever they shop outside the Netherlands. So that is a clear incentive. And obviously on the receiving end as well, we would like a lot of the consumer shopping in the Netherlands or booking hotel rooms or whatever, being able to use a similar solution like that. Now, it's obviously not going to be Ideal. It's not going to be called Ideal, but something pan-European. And we've actually been trying to sell Ideal as an idea to other communities around 2009, 2010. When there was a limited interest at that point. I think we've currently come to appreciate that nobody's domestic scheme will survive on the long run in this race. It still has value, it has customers, it has merchants, but it's going to be under pressure. So either you accept that in 10 years from now you may not be as relevant as you are today, or you try to strengthen it by making something which is at least as good as that on a pan-European level. And by that I mean actually having a best-in-class solution rather than a watered-down, compromised, lowest common denominator kind of solution that everybody can just agree on, which of course I would say is the biggest risk of an endeavor like this.
Yeah, okay. So there's an element of protection of your existing business models as well in this as well. Heath, I mean, in terms of what you've been looking at, how do you see this issue, this network effect issue playing out? I mean, how do you get consumers to use it when merchants don't accept it? How do you get merchants to accept it when there's no consumers?
Yeah, well, that's of course has been touched upon. The usual chicken and egg problem in a two-sided market. You need network effects, you need issuers and you need acquirers. You need them both to get things going. You need critical mass. So merchants want a product if they have lots of consumers having it, and consumers will use the product if they have enough opportunity to use it at merchants. So that's the classical two-sided market network effect thing. I think what Eric stressed, how do you create this network effect for the initiative formerly known as Pepsi? It's the classical thing, of course, but if I understand it correctly, let's say the founding fathers of the consortium represent about 60% of payment accounts in Europe, which I would call critical mass on the issuing side. And then, of course, it has been touched upon also, you need a best-in-class, you need better, faster, cheaper, whatever seamless customer journey thing to seduce consumers to use it, but also to at the same time get the merchants to accept it, at least as an alternative to what we have out there today. But the good question, I think, was from Mark. What really is the problem from a consumer perspective that we're trying to solve here? Are consumers unhappy? I'd say no. The Dutch consumers are perfectly happy with all the products they have today, as are the Italian customers and the Greek customers and the UK customers. So there is no big challenging issue that we have crappy payment products, even if they're not European, but maybe ultimately US or Chinese for that matter, branded. But still, and then you come back to the European, with the more political thing. Still, there is this wish to have at least a European alternative. But it has to meet all the same requirements. There has to be a business case. It has to be best in class. You will still need to solve the chicken and egg problem. That's where the challenge is, and it's going to cost a lot. And you need a business case, a fair distribution of values, and that's probably where the challenge lies for EPI.
That is a challenge, Dave. If you're on the outside of this, looking at it and thinking about a modern payment scheme, so as I understand it with the EPI, I mean the business models are based around interchange and premium API payments. I mean, how would you go about incentivizing all of the parties? Where would the money come from in terms of payments?
Well, I think there are sort of two parts to this. There's the payment system, and there are the adjacencies around the payment system. The value-added elements of it. And if we make the transition to credit transfers, 222 RTP, then you can see that there's added value for. So just to take a simple example, you have the situation where a consumer, I go online to British Airways, I pay using, EPI or whatever it is, 222. At the end of the month, I see my bill and I think, I can't remember, what was that?
Have we lost you?
Uh-oh.
Is it frozen completely? That was really interesting, but I've no idea.
And it's nothing there.
Oh, we lost you, Dave. Can you repeat about the last 10 seconds of that?
I can see you guys fine. So no, I'm just saying, I think, the business model is going to come from the value-added stuff around the payments rather than the payments. And I think you can sort of see a situation where consumers, you say they're very happy with the payment system they have now. Well, I'm not. I had a £50 thing on my American Express bill for British Airways, and I phone up American Express to find out what it's for. They don't know, and I try and phone up British. They don't know. You click on it, and there's nothing there. But you can imagine a situation under 222 RTP where I get my bill, I click on it, and there's my air ticket. It comes straight up. There's all my stuff feeding into QuickBooks and so on. So I think, if we're trying to think of business model, just trying to undercut interchange doesn't get us anywhere. It's already low. I think what we have to do is look at the structures that we're building. And by the way, I'm going to say it, even though you'll get annoyed with me about saying it, but none of you have touched on digital identity yet, which is
I was going to do that, Dave.
Oh, okay. which is what really makes
just
this,
for you.
I've got a question on it.
Really make this more efficient. But my general. I don't know what you guys think, but I sort of feel like, we keep pushing forward on the payment technology, but we can't make the electrons go any faster. We can't make and every time we make the chips go faster and so on, then the FATF or the commission come along with some more rules and regulation that put the price back up. So the payment side of it is not going to generate new margin and new business model, but actually the value added stuff around it might, because there is a difference between an RTP 222 model and 8583 pull. There is a difference, and that should be the basis of new products and services, I feel.
So, but what's the difference there? Are we saying that they need to be built in from the ground up? Because those are going to be retrofitted into the existing payment scheme some way or another.
I defer to Eric about this, but I'm not sure about that retrofitting. You can see a situation where the E&M commerce merchants will go, because they'll heavily incentivize customers to use a pan-European push-only mechanism, right? So because you'll get double air miles if you pay for your a ticket. You'll get
We can travel again.
Which is underwritten by Net, so it's fine.
So they'll incentivize people in that. So on the E&M side, you can see it, and I can easily imagine a situation where in a couple of years' time, my British Airways app, suddenly sprouts the new payment mechanism, which is, Euro WonderPay or whatever it gets branded up as, and it's no problem. And if it takes 10 years to get into physical point of sale, it doesn't matter. And the reason I'm so kind of bullish about that is I've just come back from the store. I've just come and because of COVID, and I mean, none of us would have wanted it to happen like this, but I mean, it has happened. So I've just been to the supermarket around the corner. Not only does nobody pay with cash anymore, a lot of people aren't paying with cards because the contactless limit is £45, but there's no limit if you pay with your phone. So the virus has already started to push people towards that kind of, omni-channel, authenticated, and adding the N+1 payment mechanism to the phone is a very different proposition from adding the N+1 payment mechanism to the POS. So I guess I'm more bullish about this stuff because I think E&M goes first, but actually everything's going to be E&M, right? So it doesn't matter about physical point of sale so much.
I mean, that's likely to be true. I mean, last year, I've actually got a quote here. So last year, the European Central Bank produced a paper on landscape of European payments, and it was talking about SEPA cards. And it said that building a SEPA card scheme is likely to remain a political construct rather than a sound business case in the short term. All right. Now, the key word in that statement is card. All right. And it actually goes on to say at the end of this, in view of the gradual phasing out of national card schemes in the long run, the lack of a pan-European card solution may lead to the phasing out of European national card schemes, which I think domestic schemes are gradually going to disappear one with the other, and the loss of European stakeholders' strategic influence over the European cards market. But the question here is, is it cards anymore? Do we have to worry about cards? Is this whole thing about domestic cards just a red herring? We're just trying to maintain something that is actually going to go the way of the dodo.
Well, I don't know what these guys think, but if I was in charge of the European Central Bank, I'd tell them to stop messing about talking about cards and things which are nothing to do with them, and get on with building the digital, the central bank digital euro, which is the future. So, why are they even talking about this stuff? If they had a digital euro that was better, I mean, the Chinese have already rolled theirs out in 4 cities. You can already do person-to-person, phone-to-phone transfers using it. So that's what the ECB should be doing. Not cards are nothing to do with them.
Well, they're working on it, on the central bank digital currency, of course, further down the line. But what do you mean with cards? Do you mean the physical, the form factor, the plastic thing, or the standard, the ISO standard, or the American schemes?
No, I mean conceptually the bundling. So because to dreary nerds like me, cards are the payment mechanism, the merchant guarantee, the secure. I mean, it's all of those things bundled together. And I think probably all of us went to presentations about 20 years ago on the sort of day 2 of the internet, where people said, wow, digital means we can unbundle all of these things and offer them, more efficiently and we've waited a long time for it to happen. But, if you had, I mean, just as a thought experiment, if there was a digital euro, which you could load into your phones and wallets and whatever, then people would come along and build new schemes on top of that. And you could forget all about the other stuff. We wouldn't need it anymore. Okay.
I mean, going to central bank digital currencies is entirely a different discussion. And
I'm just making that point about the ECB because there is a thing that's kind of nagging at my... See, these guys are old enough to remember this. A lot of the audiences you talk to now, these kids, they don't remember that we pushed for EMV. So we built the world's best offline payment mechanism.
Yeah.
At almost the exact moment everything went online. Almost the exact moment. I mean, we were sitting around, they were doing the Netscape IPO while we were doing the Europay
I remember.
And I just wonder if we're making the same mistake again. We're building the world's most fantastic electronic money system, while meanwhile there are other people building electronic cash systems with no credit risk, no. So I just would like to at least ask the question: is it possible that some of the effort should be directed into a more digital native solution?
Okay, we've got
Eric, I think, said band-aids about cards. Well, this is what if this is band-aids for bank accounts? What if we should?
Okay,
Yeah.
so we've got about 4 minutes left. So you've all got about a minute. That's all right. Well, we had 10 minutes left when you started.
I'm sorry.
That's fine. So just go around the panel, maybe starting with Eric. If you've got a wish list of what you want to see in European payments in the next 5 years, what are your top 2 or 3 things? What would be the things you would really like to see happen?
Okay, well, first responding to Dave about how we'll pay for airline tickets in the future. I think for the coming years it will be by voucher mostly, because we're stuck with an awful lot of those. So maybe they become a credible currency because we're sitting on quite a lot of those. I think that for me the most important thing is to, and I would say that Gijs really mentioned that we do have European schemes, SEPA direct debit and SEPA credit transfer. In hindsight, you could argue that we should have moved that to instant right then, rather than just merge whatever was there and compromise. I think that the biggest thing that I'm personally trying to get done within EPI is making sure that it's not the lowest common denominator, but something that really makes a difference and is digitally native, rather than retrofitted somewhere in the future from the start, which of course means higher cost up front, but then moving faster afterwards.
Okay, thank you. So Gijs?
Yeah, I concur with Eric, and we shouldn't forget UK have their RTP scheme based on ISO 20022. The consultation on the European Payments Council, the first rulebook on the request to pay scheme that is supposed to become available as of November, when we will decide on the rulebook in the board. This is going to be a game changer too. It will create that layer on top of the plain vanilla SEPA credit transfer and the instant credit transfer, and will enable the creation of more schemes like Ideal, which are an information and messaging layer on top of the plain vanilla SCT that's useless to anyone, any retailer, because for reconciliation and so on, because it doesn't contain the information everybody needs. So I'm a true believer on the RTP. The funny thing is that last Monday already an article appeared where the third-party provider association contend that the EPC's RTP scheme is anti-competitive because they have to make do under PSD2 with crappy APIs, and now the bad banks are creating a new scheme for themselves called RTP. Can you imagine? It's hallucinating.
Okay, thank you.
I hadn't heard that, but it's logical. It's logical.
Okay, Mark, what's your wish list?
Well, wish list for me, I mean, it starts with what do merchants want? Merchants want to sell more. They want to reduce their costs. They want to reduce their risk. So schemes that help merchants do those things while at the same time helping consumers save time, save money, and be rewarded for their loyalty. Those are the things that I want to see, and the confluence of those has to exist, or else the scheme is dead on arrival. So those are the things that I want to see. I think to be honest, the big thing that EPI can help with is integrating positive assurance, right? Helping merchants know that the things that they're shipping or selling or delivering to a consumer, that consumer on the other end is actually the person that they claim to be. They don't need to worry about the identity, right? We can't use the word identity with Dave Birch, on the panel here. It has to slip in somewhere. But they need to know that positive assurance that they're not selling to the wrong person, that somebody on the other end is real, and to reduce their risk on that. So I think that's something that is really positive that could come out of this. That's challenging today in non-face-to-face transactions. But sell more, reduce costs, reduce risk. That's what merchants want. That's what I want to see.
It's not okay. Well, I was going to give Dave the last word, but he already had it, and we've run out of time. I'd like to thank you. I want to thank the panel. That's been fantastic. Thank the panel. I'd like to thank MPE, and I'd like to thank everybody for watching.
Thanks, guys. It was very thought-provoking.
I hope you all enjoyed it. Okay.
Bye,
Cheers,
guys.
Bye.
See you.
Thanks, guys.